Scalping is the fastest way to make money in trading, but on the flip side, it's also the easiest way to lose everything in a single day if you don't know the odds. So, what are the odds? To understand the odds better, we are going to look at casinos. So, how do casinos work? What makes them profitable? Let's say you go to a slot machine, and this slot machine has odds of 51 to 49, which means that in 51% of the time you are going to lose, and in 49 you are going to win. Now, these odds may look great, and they actually are pretty good if you play 5 to 10 times. But let's say you are in an online casino and you click on auto bet, which means that every 1, every 5, every 10 seconds you are actually gonna place a bet. This 1% compounds, and suddenly, before you realize it, you've lost everything. The casino only needed a little edge over you to beat you. Something similar happens with scalping. You actually don't need a huge win rate, a huge edge. You can actually repeat your smaller edge over and over, making you a ton of money. So, you need to boost your odds. So here are the 3 structural secrets that are actually going to help you be profitable. Let's start. Okay, secret number 1. Wait for price to pull back to a key level. What are key levels? There are 3 types of key levels you should look for. Number 1 is gaps. Gaps appear in the market after a big move to the upside or to the downside. These gaps are most likely going to be filled before the price moves to the other target. Look for gaps in the market and enter after they are filled. Or if you're going to trade with reversals, try to enter when there is a gap to the upside or to the downside. Number 2, support and resistance. Support and resistance levels are basically the levels where there are a lot of buyers and sellers. You can recognize them because the price often bounces off of them quickly more than 1 or 2 times. And the third, that I haven't heard anyone else talk about, are whole numbers and key prices. Whole numbers and key prices are levels on the chart that are significantly important for the certain pair or coin. For example, such level is the 30k on BTC. And as you can see on the chart, the price bounced many times of that level because it's psychologically significant. Because Michael Saylor and many other whales bought around that 30k mark. Now the second thing you should look for is volume, especially when you go to a key level. If you trade a breakout strategy, you actually want to know if the breakout is going to happen. And the best way to know that is by looking at the volume. If the breakout doesn't have any volume behind it, don't enter. The third thing, and the most important probably for your personal strategy, is to identify the market you are currently at. And I don't mean an uptrend or a downtrend. I mean, is the market actually trending or is it going sideways? So 80% of the times the market is actually going sideways. And if you have a trend following strategy, you are going to lose everything fast. So how do you identify a sideways market? Open the TradingView chart, and if you can actually draw a channel, you are in a directional trending market, which means the price goes up and down and up and down and up and down in a direction to the upside or to the downside. If you can draw a channel, but you can draw a support and resistance line only, you are in a sideways moving market. There are also strong trends that basically do this, and those moves usually create gaps, so they're quite good if you want to trade reversals. I would actually avoid entering after those moves if I have a trend following strategy, but no financial advice. So what you should do after this video is create a strategy after backtesting those 3 key secret concepts, and then have your edge, repeat it, and be profitable. See you in the next video.